All right, let's get into it. Today, we're basically going to be detectives. We've got a professional technical analysis report, and our mission? To figure out the story behind a stock's absolutely massive price move, using the data as our clues. So let's dive right in. So this is the big question, right? This is the mystery we're trying to solve. A move this big, it's not just random noise. It's a huge event, a major signal from the market. But what exactly is it signaling? Well, that's what we're here to figure out as we break down the evidence piece by piece. And here it is. This is our inciting incident. Just look at these numbers from the report. On December 29th, the stock closes at about $5.50. The very next day, it's over 10.5. And the volume? My gosh, the volume. It goes from less than 3 million shares traded to over 111 million. This is the scene of the crime, so to speak. Now, let's start analyzing the clues. Okay, so our first job is to really get the context around this wild day. We need to understand the underlying trend. Was this move just a total shock out of nowhere, or was it an acceleration of something that was already building up? Our very first clue is the 200-day simple moving average, the SMA. You can think of this as the stock's long-term average price. The report shows that baseline is $4.78, while the current price is nearly double that at $9.17. So this confirms that we are in a powerful, undeniable uptrend. No question about it. So we've established an uptrend. Great. But how strong is it really? For that, our detective toolkit has something called the Arun oscillator. This thing doesn't just show us the direction, it actually measures the trend's conviction. It tells us how much strength is behind the move. And the reading is a whopping 78.57. Now, on a scale that goes from -100 to +100, anything over 50 is considered a strong uptrend. A score this high, that confirms the trend isn't just there. It's robust, it's established, and it has some serious power behind it. The case for a strong uptrend is officially closed. Okay, we've confirmed a strong trend. Now we need to decode its personality. Is this a slow and steady climb, or is it a frantic, high-speed sprint to the top? It's time to measure the force and the speed of this thing. For this, we turn to one of the classics, the Relative Strength Index, or RSI. And honestly, the best way to think about RSI is as a speedometer for the stock's price. It doesn't just tell us that the price is going up, it tells us how fast it's accelerating. And would you look at the reading from our speedometer? The report's showing an RSI of 74.54. Now, the accepted red line for this indicator is 70, so anything above that is considered overbought. This stock isn't just speeding, the pedal is slammed to the floor. But hang on a second. Overbought doesn't automatically mean sell right now. It's not a stop sign. It's more like a warning light flashing on the dashboard, telling us that the engine has been running incredibly hot and that this recent move has been extremely aggressive. So just to get a second opinion on this momentum, we're going to check another classic indicator from the report, the MACD. It's just another way of looking at momentum by comparing the short-term price trend with a long-term trend. And yep, this slide confirms it. Our tools are in total agreement. The report shows the MACD line is at 0.846, which is way above its signal line of 0.343. This is a classic positive signal. Both the RSI and the MACD are basically screaming the same thing: powerful upward momentum. So we've established the direction, and we've established the speed, but there's one more absolutely critical piece of evidence we need to look at to validate this entire move: participation. How many people were actually involved? In the market, we call this volume. There's this old saying on Wall Street that just nails why this is so important. A big price jump on low volume? It could just be a fluke, a rumor. But a big price jump on high volume? Now that shows conviction. That's the market making a definitive statement. And look at this. Wow. Just a couple of trading days before the spike, the volume was less than 27,000 shares. On the day of the move, it was over 111 million. This wasn't a rumor. This was a fact, shouted from the rooftops. This confirms the move was a major, widely participated in market event. Okay, it's time. Time to put all our clues together. We've followed the money, we've analyzed the evidence, and now we need to see what conclusion this report actually draws from all of this data. So let's just do a quick recap of the case file. The long-term trend is sharply upward. Check. The short-term momentum is extremely high, maybe even a little too high. Check. And it's all backed up by a massive, undeniable flood of volume. Check. Everything seems to be pointing in one, Very, very positive direction. So this leads us to a pretty logical question, doesn't it? Based on all this evidence, you would expect the report's final technical score to be a resounding buy, right? Something like an 80 or a 90, maybe even higher? It really seems like an open and shut case. But it's not. The final technical score from the report is 50. Exactly 50. Right smack in the middle. Perfectly, almost shockingly, neutral. So, how? How can such extreme data lead to such a middle-of-the-road, neutral conclusion? And this, right here, is the final twist in our investigation. This neutral score is actually the key to understanding the whole picture. It's not that the signals were weak, it's that they were so incredibly strong that they actually started to contradict each other. And here is the solution to the whole puzzle. The score is 50 because that incredible bullish force, the trend, the momentum, the volume, it's all being perfectly counterweighted by the incredible risk signal of that overbought RSI reading. It's like the market is simultaneously screaming go and whoa, slow down at the exact same time. And that leaves us with this final, really fascinating question. When all the indicators are pushed to their absolute limits, but in opposite directions, and it results in perfect neutrality, what is the market truly signaling? Is it the peak of excitement, or is it that quiet moment of uncertainty right before the next big move? Well, that's the art behind the science of technical analysis. Thanks for joining me on this explainer.